Multifamily real estate is very critical to have really strong relationships, from your broker relationships to sourcing deals to your lender relationships, all of your vendor partners, and obviously your investors. We're all about relationships, about reputation and track record. Relationships are obviously key in business, but especially for us, so that we've been able to scale and really expand across the country. It's important to have several conversations before you get into any new partnership. And so I think it's important to ask the hard questions up front. I've been in bad partnerships in the past with different groups, and I realized, in hindsight, I just didn't vet them thoroughly enough. And so you need to really grill prospective partners, whether it's a vendor, even a larger investor. You don't want things to change later. You want to have expectations laid out clearly. If you can get references or referrals from people that they've worked with in the past, that can be very helpful as well. So really do your due diligence. Really vet them as much as you can, lay out expectations, and I tell people, trust your instincts. You know what I mean? Like, typically you can feel it. If it doesn't feel right, you should not do it. We've had people that have offered to bring us a ton of money, but it just didn't feel right. I don't want to get into those types of partnerships, so you got to really trust your instincts when you do that. I know a lot of people may know, like, the regular residential real estate market, there's literally thousands of real estate agents in every major market. It's not like that in these large commercial multifamily properties. There's literally like 5 or 6 individual brokers who control 90% of the inventory and the deal flow for the market. So if you don't know these guys and you don't have relationships with them, you're not going to get these deals. You're not going to get that deal flow. We see deals all the time that other people never see. We just won a deal recently. We are not the highest price, but because we have the track record and the ability to execute and perform, we have the highest probability of execution. We are able to win a lot of these deals versus some of the competitors, because sellers and brokers want to get deals closed. If they choose the wrong buyer just based on price alone, and that buyer does not close, that can literally set them back 3 to 6+ months of where they were going to close previously. So they have to be very selective when they choose a buyer. So the reputation and the relationships are critical for us. We are the general contractor, we have the GC license, but we are using third-party local construction companies to do the in-unit labor, and then our employees are managing these crews daily, walking these units. We have fixed contracts with all of our vendors. We have locked-in pricing for the lifetime of the project, which really gives us an advantage, so we don't have to worry about tariffs and supply chain issues, things like that. It's a win-win. We give them scale and consistent work. They give us really reduced fixed pricing. And then on the supplier side, it's extremely critical because we source and purchase all of our materials directly from the manufacturer at wholesale pricing. And so we have fixed pricing for all of our materials, and it's because of these partnerships that we have with these massive suppliers where we can really give them scale, and they give us that discounted pricing. In regard to how much we save per unit just because of our vendor relationships, I can tell you from experience, it's at least $10,000 to $15,000 per unit on labor and materials, because we used to not have these relationships. When we first started, we were using third-party property management. We were going to Home Depot and Lowe's and trying to source all these materials. We were trying to find whatever construction workers we could to do this work, and it was easily coming into $25,000 to $30,000 a unit. We're now around $15,000 to $16,000 a unit, all in for labor and materials to do a completely high-end scope. It saves us significant capital, at least $10,000 to $15,000 per unit. Multiply that by thousands of units, we're saving millions and millions of dollars for our investors because of our relationships with our suppliers, with our construction partners, and our ability to scale. The biggest thing is transparency and honesty with our investors. We have several repeat investors who've been investing with us for several years, and they see good results and they want to keep investing, they want to keep referring their colleagues, their friends, and their family. That transparency and honesty, it works both ways. You want to be transparent up front, but you also want to understand the expectation of the investor and tell them this is kind of how it works for reporting, for distributions. And then if there's a month that doesn't go well, you want to be transparent with that and explain to them, hey, this is what happened operationally, and this is why it happened. We've identified this, we're accountable for that, and this is how we're going to fix that going forward. At the end of the day, we are an investment company, and so our direct client or consumer, if you will, is the investor. And so that is our number one priority, and our ability to communicate with our investors and establish that trust has allowed us to grow. Without our investors, we would not grow, we wouldn't have a company. If you want to succeed in multifamily or any business, honestly, it is all about relationships, it's reputation based, right? And so when you're first starting with no track record, you have to do what you say you're going to do. And it's tough because you may not have ever done it before, so you have to really push yourself to be able to achieve the things that you're telling people you're going to achieve. And then it starts to have this exponential effect. And as you continue to scale and grow, you will get referrals, you will get endorsements from different relationships that allow you to grow. I mean, we established ourselves in Phoenix and we had really good relationships with all the local brokers who sent us, new investment opportunities, new properties. Well, that is exactly how we expanded to Dallas and to North Carolina, because those same brokers in Phoenix introduced us to their colleagues in other markets and they endorsed us, and we instantly were getting off-market deal flow to allow us to scale. But it's because we had spent several years establishing those relationships, establishing that reputation as a credible group. And the same thing goes for lenders. We have several lenders who will call other lenders in the industry to kind of get a gut check on us as a borrower, and they always say nice things, and that allows us to open up and diversify our lender base as well. The same thing goes for vendors. I mean, there's a lot of groups out there the last few years that have not been paying their vendors because it's been such a tough time in the industry. We pay all of our vendors and they give us, their full attention when we need work done. So it just gives you leverage, it gives you influence. You want to have that reputation of being honest and transparent and having several strong relationships in the industry.